Okay, so let's begin. Today we are going to discuss a new topic, the second head, that is income from house property. This is quite a big topic, in fact, and very interesting and very important, practically also and from exam point of view. So, income from house property. What is house property? A house property means any building of which the SSE is the owner. Ownership of the building is must in case of calculation of income from house property. So one important thing is any building, okay, of which the SSE is the owner, and ownership is very important for this income to be charged under house property. So when you look at the name of this particular head, house property, so what people may think that it is only about the house like we say residential properties and all to be the house, but it is not only the residential properties or so the flats or the houses and all, but any such building, any constructed structure, whether it is residential, whether it is commercial or so, it will come under this. Okay, any such income coming out of these properties will be taxed under income from house property. So let's say, what are the incomes that you receive any house property? So see, there are two types of incomes. One is a rental income and other is a appreciation. The price appreciation of the properties. So the rental income will come under income from house property and the appreciation will come under capital gains. Although that is only be taxed under capital gains when it is the property sold and when you have got certain profit out of it, then it will be taxed under a different head, that is capital gains. Okay, so both the things are different here. Rental income is different, which will come under income from house property, and the price appreciation, the profit that you get while selling, that will go under capital gains. Okay, second thing is when they say ownership is required. So over here, let's say Mr. A, he lets out his property to Mr. B. Okay, he let out the property to Mr. B, and Mr. B is subletting this property to Mr. C. Okay, Mr. B is paying a rent of 5 lakh rupees per annum to Mr. A, and he is charging 6 lakh rupees per annum from Mr. C. It is possible, right, that people who take the property on rent or lease, they might sublease it or sublet it to somebody else also, subject to the terms on the agreement. So over here, in this case, Mr. A is the owner and Mr. B is a tenant and Mr. C is also a tenant. Now, whatever income that Mr. A is receiving of 5 lakh rupees, for him, this is considered as income from house property. This 5 lakh that Mr. A is receiving is income from house property because he is the owner. But Mr. B, who is receiving this 6 lakh rupees from Mr. C, for him, this will come under income from other source. For him, although this is a rental income, but it won't be charged under income from house property because Mr. B is not the owner. Because he is not the owner, it will go under income from other source. And how much it will be taxed? So the rent received is 6 lakhs. And he is also paying the rent of 5 lakhs. So 1 lakh is the profit. This is income from house or income from other source. Okay, the tax is only on 1 lakh rupee for Mr. B. And for Mr. A, he will have to pay tax on 5 lakhs. And although there are certain exemptions here, but logically this is his taxable income. So if you have a rental income from any such property which is constructed, whether it is a resident, it is an apartment, a house, a villa, a commercial showroom, shop, factory, from wherever, if you are receiving any rent, it will be taxed under this head. And if there is any such income that you are receiving from an open land, you have a land, an open land, and you have given this to someone for parking purpose or for some purpose, but it is not a constructed property, it is just an open land and you are receiving a rent. Okay, so this income is again not an income from house property, it will be income from other source. So for any income to be eligible under this house property, it has to be any proper building. There has to be a structure and ownership. Now, how do you calculate this taxability of such income? So there are few steps. Step 1 is you have to determine the gross annual value of the property, GAV. Out of that, you have to determine, calculate or deduct the municipal tax paid by the owner during the previous year. So reduce or deduct that municipal tax, and this is actually paid, okay? Not on due basis, on payment basis. If you have paid, then only you can deduct. अगर पे नहीं हुआ, due है तो deduct नहीं होगा. And then after deducting this, whatever is the balance becomes the net annual value, NAV. Okay. Mutual fund में NAV means
net asset value.
Net asset value. Okay. Here it means net annual value. Okay, ये दोनों में don't get confused. Both are NAV, but that is a separate NAV. Mutual fund is separate, and here it is separate. This is net annual value. Now to calculate the gross annual value, first what is important is to calculate the gross annual value. So to calculate gross annual value, we should know these 4 values: fair rental value, municipal value, standard rent, actual rent received. Okay, these 4 values. Now what is a fair rental value? Fair rental value is, let's say you are living in an apartment. Okay. Now you are living on one floor, 101, and there is one more flat on first floor or second floor, 201. They both are, say, 3 BHK house. The next floor, 201, this has gone for a rent of 25,000 rupees per month. Your flat is also in the same building, same locality, same building, maybe on the same floor, on a different floor, same size. This is also 3 BHK. So can we say that this flat's rent is also should also be 25,000 per month?
Yes, sir. Depending on the maintenance. Yes.
Yeah. But when you are, you know, when you are in the same building, same type of flat. So if one flat has gone for a rent of 25,000 reasonably, so your flat ka rent should also be around 25,000 ideally. So basically this value is called the fair rental value. Just like we say market value, that what is the prevailing rate in this area, what is the market value. So this is like the fair rental value, that what is the reasonable value of rent that similar type of property is getting in this particular area, that is called fair rental value. Although one more thing we need to know, in the building flat number 101 and 201, okay, as we discussed that they both are 3 BHK. Now this particular flat is unfurnished, which has gone for a rent of 25,000. This is my flat, which is furnished. Now I expect a 30,000 ka rent out of this property. So can we say that this I'm charging 30,000 for the 4 walls only? What do you think? If I'm expecting 30,000, this 30,000 is a rent for the 4 walls only?
No, sir. Furniture is also there.
Yes. So I have to segregate this, that what is the rent for the unfurnished flat and what is the rent I'm charging extra towards the furniture. So logically 25,000 rupees is for the unfurnished apartment and 5,000 extra I am charging for the furniture. In this case, only this amount is supposed to be taxed under the head income from house property, and this amount has to charge under income from other source. Not many people are aware about this fact, but only to the extent of the unfurnished apartment ka rent should be charged under income from house property, and to the extent of extra rent that you are charging towards the furniture would not go under house property, but it will be taxed under income from other source. Although everyone now what they do, 99% of the population, they will put this under income from house property. In case if they are filing their returns and showing this entire 30,000, they will show under income from house property, which is wrong. In fact, more than 50% or 60% of such rental incomes actually are received in cash, and people don't even show this to the government. It all, is a source of generating black money. So people, end of the day, don't even disclose that they have any rental income because they are receiving it in cash. But government also has put certain rules which says that if you have any property in your name, okay, if you have any property in your name, you will have to either stay in it or you will have to let it out. Okay, you cannot say that it is this, I am not staying in a property and it is vacant. One property will be self-occupied, another property would be let out or deemed to be let out. Let out nahi hai to bhi the government will say that it is deemed to be let out and you will have to show some income and pay tax on it. So not letting out a property, it is your mistake. Okay. So that is fair rental value. Then you have municipal value. Just like, every area, there will be how when we are going and buying any property, so there will be every area ka a predetermined registration value has been given. Like this area ka per square feet is 1500 per square feet, other area ka 2000, other area ka 3000. So government will set certain value. Okay, the municipal value. So over here, every area will have its own municipal value set by the municipality or government. So that is the municipal value. Standard rent. Standard rent is a rent which is set under the Rent Control Act. Not every state, but there are few states which has a Rent Control Act. So under the Rent Control Act, there will be certain amount of rents which are predetermined. So that is the standard rent. And actual rent received. How much rent you are receiving? So all these four values has to be known to calculate the GAV. Okay. This standard rent, again, I am saying that it is not applicable to all states, but few states like Maharashtra, West Bengal and all, they have certain rent control act. So over there, certain minimum rents are being defined. Annual value taken as nil. There are certain properties where the annual value will be considered as zero. That is the annual value of a property which is in occupation of the owner for the purpose of his residence would be considered as nil. So the property in which you are living, it is under your occupancy, you are staying, then such property ka there is no annual value. Agar annual value nahi hai to no tax. So you don't need to pay tax on the value of a property in which you yourself live because you are not collecting any rent from your own self. So it is nil. If the owner has more than one house for the purpose of his residence, the annual value of one such house at his option would be considered as nil. So if you have two houses, okay, house 1, house 2, Now, actually, you are living here and second house is vacant or maybe let out. Okay. So they say that if you have two houses, more than one houses, then one house you have to declare it as self-occupant and other will be considered as let out or deemed to be let out. But it is at your discretion that for filing purpose, you can show this as self-occupied and other as let out, or you can show this as let out and this to be self-occupied. This is your wish. As per your discretion, you can declare. It is not necessary. It is not necessary that you have to declare that house only as self-occupied in which you live. It is your option. A let out property also you can claim it as a self-occupied, and a self-occupied you can declare it as a let out. Why would you do that? Because of some tax planning purpose. It is possible that if you are claiming second house as a let out, you are paying more tax, and if you claim this house as a let out, you will pay less tax. So wherever you may pay less tax, you have the right to declare that. So this particular rule was before 2019-20. Okay, this was up to that particular year. Then what they did after 2019-20, they said that any two properties can be claimed as self-occupied and remaining as let out. Because what happens is, let's say you are living in one house, you have two properties. In one house you are living, in other house your family or your parents, somebody is living there. So now they are giving the option to claim two properties as self-occupied. But in case if the second property is actually let out, then you have to show it as a let out. Only thing is, if you have two properties which is both are self-occupied, in one house you are living and in one house your parents are living or your extended family somebody is living, then you can claim both the properties to be self-occupied. But in case one property is you are living and other property is actually let out, then you have to show it as a let out. If the SSC is the owner of only one residential house which he is unable to occupy on account of his employment, business or profession carried on at any other place, and on account of which he has to reside on some other place in a building not owned by him, the annual values of such house shall be nil. So you are living, you have only one house. Okay. But this house is in some area, let's say this house is in Bangalore. But you have to come to Hyderabad for employment. You have to come to Hyderabad for employment. So because of employment, you have to go to some other city or state, and your house, you are not able to occupy your house. So in that case also, this house ka value is considered to be nil unless and until you actually let it out and then show the rental income. Okay. if the SSC is the owner of only one residential house, which he is unable to occupy due to his employment or business or profession carried on at some other place, and on account of which he has to reside at that particular place in a building not owned by him. So in the new city, you have not bought a new house, you are living in a rented place. Although you have your own house in some other city, but now in the new city, you are living in a rented apartment. So the annual value of such property will be nil. At the same time, here you can also claim HRA benefit, house rent allowance. Now we will see how to calculate the GAV. There is a process. We understood what are those values.
Sir, in case we are residing outside our home and we are still receiving annual value is nil, but we are receiving a rent as we let it out. So that will not be captured, sir?
That's what I said, that this will be considered as nil only if it is not let out. The day
Not
when you
let
let it out, you will have to show rental income.
Okay. Sir.
This provision is
Which
only
usually-
that if somebody has not let it out because of some reason, so then unnecessarily government doesn't want to charge tax on it. But if you are receiving any rental income, then it is an actual income and you have to pay tax on it.
Okay.
Now to calculate the GAV, step 1, you have to compare the fair rental value, compare it with the municipal value. Compare it with municipal value and pick the one which is higher. Pick the one which is higher. Out of fair rental value and municipal value, whichever is higher. Step 2. The step 1 value, now compare this with standard rent. Pick the one which is lower. Out of these two, whichever is lower, you have to pick. Step 3. The step 2 value, compare it with actual rent received or actual rent. Pick the one which is higher. Pick the one which is higher. Out of this, you have to reduce the rent for vacancy period. If there is any vacancy, okay, if there is any vacancy for any of the part of the year, that you reduce and then calculate
municipal tax.
Then whatever is the balance, this becomes the GAV. This becomes the GAV. Municipal tax is after this step.
Okay, sir.
Right. So here you get GAV. Out of this, further you reduce the municipal tax paid, and then the balance that you get is your NAV. Okay. We will do lot many problems